So the next section then is your balance sheet. So the balance sheet is like your question one. Okay, so we've worked on this before. So your balance sheet is going to have your fixed assets, which is made up of your clubhouse and your equipment. The cost is 25,250,000, and your cost for equipment is 79,000. And then the depreciation then was from that working that we would have done as part of your income and expenditure account. So 250,000 is your cost, 5,000 is your accumulated depreciation, and then we got 79,000 for your equipment and 19,750 for your cumulative depreciation. So you're going to get your net book value, take your costs from your cumulative depreciation to get your net book value, do it for your equipment as well. You're going to add up your cost to get your total cost, add up your cumulative depreciation to get your total cumulative depreciation, and then add up your net book value to get your total net book value. Then you're going to have your financial assets, okay? So your financial assets, they're your investments. So we have done a working of them at the very start to calculate what is our total investments for our accumulated fund. So 50,000 is going to be your investments. So you're going to add your investments up to your total net book value for your fixed assets. Your next heading then is going to be your closing stock. So items that always go into your closing stock will be your, or items that always into your current assets will be your closing stock and your debtors. So they're always going to be found at the end of the question. So you got your bar stock, 13,300, and then you got your debtors then of 300. Items then that go in there will be income due, also go in there, and expenses prepaid. So your income due, 500. That's taken from the end of the question. So investment interest due, 500. We have prize bonds then that we had in the question. They're on our receipt side. Sorry, they're on our payment side. So 4,400, we bought them. We actually have them now as an asset for the rest of our lives. And then your bank balance then of 45,180. Be careful with that. That's the balance at the end of the year. So when we open up next year, we'll have an opening balance of 45,180. So remember, your closing balance for one period is your opening balance for the next. So that's going to come down to the asset side. That's why it's an asset. If that bank balance was on the receipt side, then for next year, that balance will be brought down to the payments. So that would mean it'd be a liability. But for this purposes, it's in our assets. So we've got a bank balance of 45,180. We add all these up then to give us your total current assets. And from that, then you're going to take away your creditors due within 1 year. You always have your creditors. Will be the first item that goes in there. So you'll have 8,600. And then we've got subs prepaid down here of 300. So those two are going to be added together to give us 8,900. So remember, this table will help you with that because subs is an income. If it's prepaid, it's going to be a liability. So that's going to help you as well. Other times, if you forget where it goes on the debit or credit side, look at the question one. There's a list of trial balance entries that'll help you with that. So you're taking your liabilities away from your assets and you get 54,780. That's going to be added on to your financial assets because that's your working capital. So that's going to give you 409,030. And then you got your finance by. So how do we finance our club? So we finance it by your life membership of 24,000. That's going to be this little adjustment that we did as part of our subs. So 24,000 here, working 8. Then you have got your accumulated fund. So your accumulated fund that we did at the first part, so the very first statement we did, and we got 310,136. Then you got your surplus income over expenditure from your income and expenditure account of 34,894. And then you've got your last one, your levy reserve fund, the very last adjustment that you'll have, the levy reserve for this year. So we have the amount of 20,000 coming in. We have this here, levy reserve for 2010, 100 by 200 members. So that's going to give you another 20,000. So our levy reserve fund is now 40,000. So 40,000 is going to go in here for your levy reserve. And then you're going to add up all these four. and then you'd see that the two of them balance, so you know if the question done correctly. And then that's your balance sheet completed.